Stop sending money home until you watch this video. If you're sending large amounts overseas in 2026, you are likely triggering a hidden federal tracking system without even knowing it. If you split your money into smaller amounts, like sending $9,000 today and $2,000 tomorrow to avoid the limit, that is a federal crime called structuring. It instantly flags your account for suspicious activity, and federal agencies will investigate. Instead of trying to beat the system, always keep your paperwork clean, prove the source of your income, and let the automatic bank reporting happen naturally. It's 100% legal to send large amounts if it's clean money. Share this video with anyone who sends money abroad to keep them out of trouble, and hit like button for more updates on how to protect your cash. Now, let us peel back the layers of what actually happens the moment you click send on that transfer app or walk up to a counter to send money across the border, because what you think is a private transaction between you and your family is actually being watched by some of the most sophisticated surveillance systems on the planet. Most hardworking people assume that as long as they earned their money legally, paid their taxes, and are simply trying to support their aging parents, pay for a sibling's education, or invest in property back home, they have absolutely nothing to worry about. But the reality of the global financial system in 2026 is that innocence does not protect you from being flagged, and misunderstanding a single obscure banking regulation can completely freeze your life savings, lock you out of the banking system, and draw the immediate aggressive attention of federal investigators. We have all heard whispers about the $10,000 threshold, and over the years, this number has taken on a mythical status in immigrant and expat communities worldwide, with people passing down survival strategies like folklore. You hear uncles, co-workers, and friends telling you to always keep your transfers under that magic number, believing that if you just send $9,900 or split the amount into two smaller transactions over a single weekend, you are successfully staying off the radar. This is perhaps the single most dangerous piece of financial advice circulating today, because the systems monitoring your money are not operated by human bank tellers who might overlook a pattern, but by highly advanced predictive artificial intelligence algorithms deployed by the Financial Crimes Enforcement Network, or FinCEN. When you initiate a transfer that touches or approaches that $10,000 mark, the bank is legally required by the Bank Secrecy Act to file what is known as a currency transaction report. Now, a lot of creators and online forums will tell you that this triggers an immediate alert to immigration enforcement or local police, creating a sense of panic that causes people to make terrible, panic-driven mistakes. The truth is that a standard currency transaction report is a routine piece of administrative paperwork. It is a compliance mechanism designed to track the flow of cash to prevent massive international money laundering and cartel operations. If you genuinely possess clean documented income, filling out this paperwork or allowing the bank to file it automatically is completely safe and standard procedure. The real trap, the one that destroys families and ruins lives, happens when you actively try to avoid that report, a process the federal government legally defines as structuring. Let us look at how this plays out in real life so you can see exactly how the algorithm traps the unsuspecting sender. Imagine you worked overtime for months, saving up $12,000 to send back home for an emergency medical procedure or a down payment on a house. You recall hearing that $10,000 is the danger zone, so you decide to play it smart, or at least what you think is smart. You go to a transfer service on Monday and send $6,000, and then you walk into a different branch or use a different app on Wednesday to send the remaining $6,000. To a regular human being, that looks like a logical way to manage your cash flow and avoid unnecessary paperwork. But to the automated surveillance grid, a massive, bright red alarm just started flashing next to your name. The software running in the background of these financial institutions does not look at your intentions. It looks at data points and behavioral patterns. It instantly aggregates your identity across multiple platforms, links the transactions together, and flags this specific behavior as an intentional attempt to evade federal reporting requirements. The moment that happens, the bank is no longer just filing a routine, harmless administrative report. They are now legally mandated to file a suspicious activity report without your knowledge. This is where the situation turns incredibly serious, because by law, A bank teller or a customer service agent is strictly prohibited from telling you that a suspicious activity report has been filed against you. You will not get an email warning, you will not receive a phone call asking for clarification, and you will not see a notification on your mobile banking app. Everything will look perfectly normal on your end, while federal investigators begin quietly looking into your entire financial history. They will look at your tax returns, your employment data, your history of deposits, and your connections abroad to determine why you are actively trying to hide your financial movements from the government. For many people, the first indication that they have been caught in this net is when they wake up one morning to find their bank accounts completely frozen, their debit cards declined at the grocery store, and their hard-earned money locked away in a legal limbo that can take months or even years to resolve. You suddenly find yourself in the terrifying position of having to hire expensive legal counsel to prove that your own money is legitimate, all because you tried to avoid a piece of paper that would have caused zero issues if you had just let the transaction go through normally. The federal government takes structuring so seriously because it is treated as a federal felony, regardless of whether the money came from a legal job or an illicit enterprise. The act of hiding the transaction is itself the crime. As we navigate the landscape of 2026, the integration of banking systems means that these flags move faster than ever before. In the past, you might have been able to fly under the radar by using cash at smaller independent remittance booths scattered throughout immigrant neighborhoods, thinking that these mom-and-pop shops did not have the technological capability to track you. Today, those independent services are bound by the exact same strict compliance laws as the major global banks, and their back-end systems are directly tied into the same regulatory networks. Every time you present your identification, your passport, or your consular card to send money, that data is instantly cross-referenced against global databases to ensure compliance with anti-money laundering and counter-terrorism financing statutes. This brings us to the core issue of why so many people accidentally trigger these investigations and how the fear of government overreach actually drives good citizens into making choices that make them look guilty. There is a deep-seated, understandable anxiety within many international communities regarding government surveillance, taxation, and immigration status. When people hear high-urgency warnings about federal agencies monitoring their wealth, their natural instinct is to withdraw from the system, to minimize their digital footprint, and to keep their transactions as small and quiet as possible. But in the modern financial architecture, anonymity is the ultimate red flag. Trying to look invisible is exactly what makes you stand out to the algorithms designed to catch international criminals. If you want to protect your family, your freedom, and your hard-earned wealth, you have to change the way you view financial compliance. Instead of viewing federal reporting thresholds as an obstacle to be avoided or outsmarted, you must view them as a protective shield. When you openly deposit your money, provide clear pay stubs, show your tax filings, and send your transfers in large, transparent lumps, you are providing a clear paper trail that proves you are a legitimate, law-abiding individual. The government is not interested in stopping a worker from sending $10, $15, or $20,000 home to build a house or care for loved ones, provided that money can be traced back to a legal source of employment where taxes were properly withheld. Let us break down exactly what you should do if you ever find yourself needing to send a large sum of money home, so you can execute the transfer with total peace of mind and zero risk of triggering an investigation. First and foremost, never, under any circumstances, break a large sum of money into smaller pieces to keep the transactions under $10,000. If you have $15,000 to send, send the entire $15,000 all at once. Yes, the bank will ask you to fill out a form, they will ask you for your social security number or tax identification, and they will ask you to declare the purpose of the transfer. Do not view this as an interrogation. View it as a routine verification process. Answer the questions honestly, provide the requested documentation, and let the transaction proceed openly through the front door of the financial system. Secondly, you must maintain immaculate records of where your money comes from and where it is going. If you sold a vehicle, kept the cash, and now want to send that money abroad, ensure you have the bill of sale, the title transfer, and any bank deposit receipts that prove the origin of those funds. If you received an inheritance, a gift from a family member, or a payout from a legal settlement, keep every single piece of correspondence and legal documentation associated with that windfall. If an algorithm ever flags your transfer for review, having a neat, organized folder of financial documents ready to present to your bank's compliance officer will resolve the issue in a matter of hours, rather than letting it escalate into a full-blown federal asset seizure. It is also vital to understand that the destination of your money matters just as much as the origin. The global financial system monitors certain geographic corridors with a much higher level of scrutiny due to regional instability, banking weaknesses, or political tensions. If you are sending money to countries that are heavily scrutinized by international regulatory bodies, your transactions will automatically face a higher baseline of review, regardless of the amount. In these scenarios, attempting to use informal transfer networks, underground banking systems, or unregulated peer-to-peer crypto networks to bypass traditional banks is an absolute recipe for disaster. These alternative pathways are heavily monitored, and any connection between your personal bank account and an unregulated entity will result in an immediate lifetime ban from major financial institutions. To fully understand how deep this rabbit hole goes, we have to look closely at how the concept of global financial surveillance has transformed over the last few years, escalating into an inescapable digital dragnet. For generations, sending money back to your home country was as simple as handing physical cash to a trusted agent who operated out of a neighborhood grocery store or a community center. There were no invasive questions about your employer, no demands for digital fingerprints, and certainly no algorithmic systems tracking your family's spending habits across the ocean. The system relied on mutual trust, community ties, and a mutual understanding of basic survival. But in today's hyper-scrutinized global economy, that traditional system has been completely dismantled and replaced by an aggressive, real-time tracking network that treats every single cross-border transaction as potentially illicit until proven otherwise. This massive shift means that the strategies our parents and grandparents used to navigate international money transfers are not just obsolete. They are actively dangerous, serving as an immediate trigger for asset forfeiture and federal investigation. When we talk about the enforcement mechanisms behind these regulations, many people mistake the true nature of who is watching their bank accounts. There is a common misconception that federal agents are manually auditing bank accounts, looking for individual names or specific nationalities to target. The terrifying truth is much more systemic. The modern financial compliance grid is entirely automated, operating on advanced predictive models that monitor trillions of data points every single second. These machine learning protocols are programmed to flag any behavior that deviates from a hyper-specific definition of normal consumer activity. If your account typically handles routine transactions, like paying rent, buying groceries, and receiving a standard paycheck, and suddenly initiates a series of rapid, high-volume transfers to an international destination, the automated system does not wait for a human supervisor to review the file. It instantly triggers a protective lock, freezing your funds in mid-transit, while generating a hidden alert that is automatically sent to federal compliance databases. The consequences of hitting one of these invisible digital tripwires are immediate and devastating, often catching hard-working individuals completely off guard. Imagine working multiple jobs for an entire year, sacrificing every luxury, and living below your means just to save a substantial sum of money to help your family purchase land or pay for an emergency medical procedure back home. You walk into your local branch, secure in the knowledge that every dollar you possess was earned through honest, backbreaking labor. But because you are terrified of bureaucratic red tape, or because a well-meaning friend advised you to keep the transfer quiet, you decide to send the money in a series of smaller sequential increments over the course of a single week. To you, this feels like a cautious, conservative approach to managing your personal wealth. To the bank's automated compliance engine, however, you have just executed a textbook example of structuring, which is an explicit violation of federal anti-money laundering statutes. Once that red flag is raised, The bank is legally prohibited from cooperating with you or giving you any indication that your account is under intense regulatory scrutiny. Under the strict rules of the Bank Secrecy Act, a concept known as the tipping off provision makes it a federal crime for a bank employee to inform a customer that a suspicious activity report has been generated against them. This creates a deeply surreal and frightening experience for the unsuspecting consumer. You might log into your mobile banking app to check the status of your transfer, only to find a vague, generic error message stating that your account has been temporarily restricted for security purposes. When you call customer service or visit a physical branch seeking answers, the employees will look at you with a scripted, polite detachment, claiming that the issue has been escalated to a specialized back-end department and that they cannot provide any further details. Behind the scenes, your funds have been placed into a legal holding pattern, completely isolated from your control, while investigators evaluate your financial history to determine if your assets should be permanently seized under civil asset forfeiture laws. Civil asset forfeiture is perhaps the most weaponized and least understood aspect of the modern financial enforcement landscape, representing a massive risk for anyone who moves large sums of cash outside standard protocol. Under these controversial laws, federal and local law enforcement agencies have the power to seize property, vehicles, and entire bank accounts if they merely suspect that the assets are tied to illegal activity. Crucially, the government does not have to formally charge you with a crime, nor do they have to secure a criminal conviction in a court of law to take your money. The legal proceeding is actually brought against the property itself, meaning the lawsuit is literally the government versus your bank account. To get your hard-earned savings back, the burden of proof is completely shifted onto your shoulders. You must hire an expensive defense attorney and present undeniable documentary evidence proving that your money came from a completely legitimate source and was intended for a legal purpose. For an ordinary family, the legal fees alone can quickly eclipse the total value of the money that was seized, forcing them to abandon their life savings entirely. To make matters worse, the global reach of these surveillance networks means that escaping the grid by using alternative financial platforms is becoming virtually impossible. Many creators and online influencers heavily promote decentralized cryptocurrencies or unregulated peer-to-peer transfer apps as a foolproof method to bypass traditional banking restrictions and send money home without government interference. While these platforms promise total anonymity and freedom, using them to move significant amounts of capital in 2026 is one of the fastest ways to destroy your financial future. Centralized banking institutions have developed incredibly sophisticated forensic software that scans your account activity for any interactions with crypto exchanges or unverified digital wallets. If the system detects that you are withdrawing large sums of cash or routing transfers through high-risk digital asset platforms, your primary bank will instantly flag your account as an unacceptable compliance liability. Rather than risk a massive fine from federal regulators for failing to monitor your transactions, the bank will simply choose to permanently terminate its relationship with you, shutting down your checking accounts, canceling your credit cards, and blacklisting your identity from the entire traditional financial system. This level of institutional blacklisting can completely paralyze your ability to survive in a modern economy, effectively cutting you off from the essential tools required to build a life. Once a major financial group closes your account due to a compliance flag, that information is recorded in a specialized consumer reporting database known as check systems, which acts as a hidden credit bureau specifically for banking behavior. When you attempt to walk across the street to open an account with a different bank or a local credit union, their system will run your name through this database, see the regulatory flag from your previous institution, and immediately deny your application. Suddenly, you find yourself completely unbanked, unable to receive direct deposits from your employer, unable to cash your paychecks without paying exorbitant fees at predatory check-cashing storefronts, and entirely locked out of the digital economy. All of this can happen without you ever committing a single actual crime, simply because your transactional behavior mirrored the patterns of an international money launderer. The only definitive way to survive and thrive within this high-stakes ecosystem is to completely shed the old mindset of financial secrecy and instead lean into absolute, aggressive transparency. You must understand that within the modern regulatory framework, trying to look invisible is an immediate admission of guilt. If you need to send $10,000, $20,000, or even more to your home country to support your loved ones, you should do so with your head held high, walking directly through the front door of a reputable financial institution. When the bank teller asks you to complete a currency transaction report or provide documentation explaining the source of the funds, do not react with defensiveness, anger, or suspicion. Understand that this paperwork is not an interrogation designed to